All right, my favorite people, Sterling White here, and back at it again with today's topic on why I stopped buying real estate. No, this is not clickbait. I have literally not bought anything for close to about a year now. So I'll be going through the various reasons why. So you'll definitely want to stay tuned until the very end. The first reason is low inventory, low interest rate, and high demand, which of course that leads to higher prices. And now people are more seeing that just due to the printing off of all this money, that real estate is a great asset to have your money into because it is a hedge against inflation. Because as rents go up, cost of goods go up, that leads to asset values going up. And just a quick case study for you is recently sold a 80 unit that this was bought in the end of 2017, early 2018. And the price that ended up getting for that property that bought in Indianapolis, that what someone paid for it, have absolutely no clue how they were able to make that work. But with that really goes into what Robert Kiyosaki talks about is on how you make money is you make money when you buy. And on that particular deal actually went direct to owner to purchase that property and bought it for $3.35 million. And easily, after actually purchasing it, a broker said minimally they would have listed that for $3.8 million in as-is condition. So the direct owner approach still steadily taking that because you're able to because of course once it hits the market, you're not only dealing with buyers in the same state, now across the country, and now internationally once that does hit the market. So we're going to go ahead and go into the reason 2, which is patience. I'm a firm believer in patience, and part of the reasons why I'm not so much on social media because everyone sees highlights and they don't realize the sacrifices that it takes to go into that. And one thing that I've learned just studying others who are further along in their journey that have amassed these larger portfolios, and they also have been able to scale at a different level, was they ended up really ramping acquisitions up during the tough times, during the downturn. And as things started to heat up, that's actually when they started to sell off more and not be so heavy in acquisitions mode. They still do buy, but not as they were during, let's say, after the 2009, 2010 crash happened. Shortly after that, that's when they were really ramping up. And then as things started heating up in the market, that's when they started to slow down from that. And one quote that really goes into this that I like by Warren Buffett says, "Fearful when others are greedy, and greedy when others are fearful." Love that quote. And this is also, I'm a part of EO, which is Entrepreneurs Organization, and I just always study other people that again are further along. And one of the guys that I was speaking with, which is about 20-ish or so years in the industry, they said, yeah, we've had some years where we just haven't bought anything, but then we've had some really great years to where we were able to get multiple home runs. So that's what I just wanted to share with you, is that patience is key, and real estate is really a long-term play, and that it's not a get rich quick, it's a get rich slow. Now let's go into the next reason. And the last but not least is sellers' expectations are sky high, if not delusional at times. But of course with that is buyers are at fault as well, because they are coming up to those expectations in that high bar that has been set. And I like to go back to the example, Buck Ridge at Southport, the 80 unit bought the beginning of 2018, that bought it for $3.35 million. Several years later, sold it for $5 million and still was not completed with the actual business plan. But someone saw the vision and ended up paying a little bit more for that. But that helped is just buying right, and then the timing of actually buying the property, and then prices just steadily going up. Another investor I spoke with, shout out to you, Brian Burke, if you happen to be watching this. I remember picking his brain after the Bigger Pockets conference. And he was talking about he bought a property here in Houston for just over $60 million. A couple years after that, someone bought it for $80 million. And someone in the crowd asked him what did you do as far as forcing appreciation, your business plan to justify that increase or what that person bought it for? He said, I really couldn't justify that. We really didn't do enough to do that, but that just goes to show you that the prices that people are willing to pay. So don't want this to be doom and gloom, of course, because there is still an abundance of opportunity. Still have the eyes open and continually nurturing those relationships with owners, because I take the direct approach and just sticking to the fundamentals, which is buying right, so not overpaying. 2 is financing right. 3 is managing right, because you can do everything on the front end properly, but not manage the property and run into the ground. And buying in good to great locations, because if you buy in subpar locations, or the hood, the ghetto, whatever you want to call it, is yes, it looks good on paper, but the actual execution is difficult. Ask me how I know. So appreciate you all so much. If you just want more insights on how to further get to where you are, to where you want to go, or even more so taking the direct to owner approach and just more insights on building that out, there's a link below to schedule a strategy session, which will be with myself or someone on the team, where we really, about 30 to 45 minutes, take a deep dive into your business and put together an action plan for you. So appreciate you. Keep being awesome. Those of you on the YouTube, like and subscribe the content, and everyone else on other platforms such as iTunes, SoundCloud, World Star Hip Hop, leave that rating. It would really mean the world. Thank you.